Thank you, Serge. Good morning, ladies and gentlemen. Allow me in the first instance to recognize Reverend Jesse Jackson, who we've become very friendly with over the last 3 years as the Progressive Business Forum. And I would also like to recognize my ambassador, good friend of the Progressive Business Forum, His Excellency Panelists. He's flown up from Washington, I understand. Very good to see you after such a long time. And then, of course, I'd like to recognize my Deputy Minister, Elizabeth Tebete, Deputy Minister of Small Business Development in South Africa. I'm Daryl Swanepoel, and I'm the convener of the Progressive Business Forum, former Member of Parliament, serving on the Trade and Industry Committee, Republic of South Africa, and also an accountant by trade, and I, in fact, am still a director of the Institute of Accounting and Commerce in South Africa. I want to take a slightly different approach and not talk about South Africa as such, because my Deputy Minister will be speaking later this morning. I would like to look at the perspective about the investment environment in Africa, and I will do so by drawing from the recent EY Africa Attractiveness Report, which I also spoke about last year. The broader context for this year is more sober than it has been for the past 4 years. The International Monetary Fund revised down their GDP growth forecast for sub-Saharan Africa in October last year. The IMF has forecast 5.8% GDP growth in SSA for 2015. That growth is now expected to be only 3.75%, rising to 4.25% in 2016. Such has been the impact of several factors on many economies in the region, most notably low commodity prices, the economic deceleration in China, and the slow recovery of Europe, rising debt levels, and currency volatility, mostly external factors not controlled by Africa itself. As a result, the mood this year is less celebratory than it has been in the past, a reminder that of Africa's complexity, of the many challenges that remain alongside the many opportunities. That being said, the fundamentals remain sound. What emerged strongly in the report was a sense of optimism rather than pessimism. There was no suggestion among those engaged in doing business on the continent that anything has fundamentally changed. This view has been consistently borne out in EY's Africa Attractiveness Survey. People already doing business in Africa, those that understand the issues on the ground, and the real medium to long-term risks and opportunities remain overwhelmingly positive about Africa's prospects, ranking it as the most attractive investment destination in the world. Just to add on to what the Honourable Minister from Equatorial Guinea said, that report points out that people looking into Africa that have not yet invested in Africa have a rather pessimistic view of investment in Africa. However, those that have engaged Africa and have invested in Africa believe it is the most attractive investment destination in the world. And that would speak to, I would say, a slanted view of Africa being portrayed in the media and in movies, etc., as the Honourable Minister has alluded to. So despite the short-term headwinds, sub-Saharan Africa will still be the second fastest growing region in the world this year, with 17 economies still growing above 5%. This is largely due to more fundamental structural changes in many economies that have stimulated domestic economies, generated rising levels of private consumption, and improved general conditions for doing business. That is why a company such as Kellogg's has recently committed a $450 million investment into a country like Nigeria. There are some headwinds that need to be navigated. Many of the African economies face very real challenges that will not take care of itself. One of the most critical concerns is rising government debt levels. If these are not urgently addressed, it will become increasingly difficult for governments to raise capital to spend the key developmental priorities like infrastructure development, education and health. We need to sustain Africa's growth, and for that we need fiscal discipline. The winners in Africa will be those countries that implement reforms and tighten up their belts speedily, and the losers will be those countries that have to borrow more when they're already highly indebted. So the message here is that there are different scenarios in Africa. It's not one size fits all on the African continent. We need to foster entrepreneurship on the continent. Africa's future is not only the responsibility of its governments. The private sector has a critical role to play in driving more inclusive growth and creating the jobs and economic opportunities that will lift even greater numbers of Africans out of poverty. A key theme is the critical role of entrepreneurs as one of the main engines of growth for the healthy African economic future. Entrepreneurs are the lifeblood of inclusive economic growth. They will provide a source of income and employment for themselves, create employment for others, produce new and innovative products and services, and drive greater upstream and downstream value chain activities. Over 80% of new employment opportunities are likely to come from the entrepreneurial sector. However, entrepreneurial development at the scale required to propel Africa forward requires supportive environments and ecosystems promoted by both governments and big business. And the need for partnerships. Most effective partnerships between business and governments in Africa. Many people believe that the relationship between governments and businesses across many parts of the continent is not always as engaged and productive as it could and should be. There's even a perception among some people in the private sector that many governments are antagonistic towards business. I don't think this holds true. There is a clear understanding on the continent that economic growth is dependent on the working partnership between government and the private sector. I think we need to take leaders, for example, South Africa's Deputy President Cyril Ramaphosa, on their word. He, at the recent launch of the Africa Strategic Growth Forum, again encouraged the private sector to raise its business concerns with government. According to him, the door to government is always open for business to engage positively and productively. And he reiterated that government, business, labor, and non-governmental organizations should collaborate to find solutions to the country's problem. As the Progressive Business Forum, we undertake and receive trade delegations from across Africa. And I can assure you that this approach we hear over and over again as we interact with government representatives across Africa. I would therefore say that a wise investor would invest his money in Africa to get good returns, rather than investing your money in United States banks where you hardly get 1% on your return. So thank you very much for the opportunity. Africa is open to